Good morning, everybody.
Good morning.
Ah, How is everybody today?
Freezing in Chicago.
Morning.
Right on.
Really?
Morning, gentlemen.
Hey,
We had
good
60
morning.
yesterday. Today we got winds blowing 20 to 30 with gusts to 50. So that's our world.
It's gonna be sunny today.
Nice. Might be here.
Yeah,
It looks like it's going to be
sunny and
clear.
50s.
Sun's not quite up yet, but getting there. It's brightening up in the east a little bit. So clear skies with wind. So anyway, so it is. All right. Well, today is the day, the CFOMC day. Um, We're going to get our decision, and markets were pretty flat right before we got on, and now it's kind of popping up a little bit. And you're seeing a lot of talk about, well, why it's kind of flat, and it's not because they don't expect a rate cut. There's 90% chance of a rate cut, um, but it's the future. What are they going to do next year? Because the market was thinking another three cuts of 25 basis points next year, and so they're going to wait until the announcement, which will be probably most likely, I don't know for 100% fact, 25% basis or 25 points down on the rates. And then we got to listen to Powell and see what he says. And could be quite a circus with Powell in there. We'll see because he's getting towards the end of his tenure. But yesterday the Dow was down 215, the Nasdaq was down 32, S&P 23. Uh, Advancers were 40.7%, decliners 55.5. So we saw, hold on, I'm on the wrong page. Let me go the other way. I'm like, that's not right. That was down 179. The Nasdaq was up 30, and the S&P was up 6. Advancers 55.3, decliners 41.2. So we got a little bit better on the market breadth, still 48% under the 50-day moving average, and we're about 53% above the 200-day moving average. And again, we have the FOMC, got the presser coming out. That's always the fun part when Powell comes out. And we've been trading sideways, for a while now, just with a 90% chance of a rate cut. On top of that, we see the global bond yields are rising to levels that last saw in about 2009. So the bonds are, looking at this rate cut with the questionable eyes. And then we had silver broke over $60 an ounce. Uh, Again, interesting that silver did that, and gold kind of stayed a little bit flat yesterday. Uh, what else we got? Like a Cracker Barrel fell 8% in pre-market, lower expected sales, and that's really due to their logo debacle that they had earlier on. They changed the logo. Yeah, customers didn't like it, didn't come in, kind of boycotted when they saw that. So a little bit lesson learned by Cracker Barrel. GEV, rose 10%. They're going to double their dividends. So GEV is up like last time I looked, $66 on doubling their dividend. And remember, when you get a dividend, it takes your stock price down by that much. So if you get a $2, if your stock's at $12, you get a $2 dividend, the stock will trade down to $10. It's going to take it right out of your stock price. Today, Oracle and Adobe earnings. So that'll be interesting. What else we got? I think that's it. SpaceX. They're targeting a 2026 IPO. I saw a story this morning. I know some of you guys are interested in that. That'll be interesting because they're saying that might be bigger than Saudi Aramco, which was one of the biggest IPOs ever. So we'll see if that's how it happens to SpaceX and what happens there. So anyway, we're up a little bit now. We're seeing a little more in the Dow. We were red earlier to flattish. There's Powell. Um, Again, there'll be a lot of talk about that. That'll be at 1 o'clock. Probably see sideways to outpace a little bit, until we get to that point. What else we got? Something that was interesting. I saw this today or last night. If I can get it to come up. There we go. Just kind of delinquency rates on credit cards, uh, just by state. Of all the credit cards, like here's my state, 20% of credit cards are 30 days uh, past their due date. Okay, you get down, you got Mississippi's 37, Louisiana 32, Alabama 31. So we got to check with Kerry and make sure he's paying off his credit card. Looks like they're having some issues down there. But what kind of strikes me is, I'm looking here 15, 20, 19, 18, high teens, the 20s, throughout the nation of credit cards that are, 30 days behind. No, defaulting. This isn't the default, which means they're not paying at all, but these are late payments. And just find it kind of interesting to see that. I'm kind of surprised that it's kind of that high. But with the situation that people are in with job losses and not getting the pay raises to keep up with inflation, I can understand why. So anyway, something interesting to kind of look at. Come back, did a little bit yesterday. When we look at what we had, again, we got out of Berkshire Investment. That turned out to be a pretty good deal. Got out at 33.33% up on that investment. And I'll show you the chart a little later. We came down from last week. We still have Carlyle Group. Didn't get into it, but if you had at the point it came across and we put it on the list, you're up about 6.9%. We'll look at that chart. Bitmine still into that from last week. That's up almost 30%. So 100 shares, you'd have been up about $870 from the time that we put in, hit a buy limit here. So that's still doing well. That's Tom Lee's Bitcoin or Ethereum treasury company. Legion Travel, we weren't in that yesterday. It did come down and hit the buy limit, so it's up about 2%. SLB hit the upper Bollinger Band, and that was an upper limit for resistance, and so got out of that one with 1.3%. And then Targa Resource Group came down yesterday. It was, 2 days ago, it didn't hit the buy limit, didn't come down. This one did come down and did it where we had it set and did pretty well, 2.56%. So we'll show that on the charts. And then Prudential never did get into that because of it hit the intermediate resistance level, came on. And I don't trade at that level based on my trading plan. Constellation Brands didn't get into that one, but if you would have got in at the time we put it on, this is when we put it on the chart, not the price that we would have paid. It's up about 5.13%. What else we got? These are all closed. Fortinet didn't get into that. They went down. If you would have gotten in, instigated the 2% rule, you'd have been down about $174. And then Keurig and Dexcom hit buy limits yesterday for interesting reasons, and they're up 1.6% and 3.59% on those on the paper trade portfolio. We're still Meta. I'm almost going to turn this back to red on Meta because we try to get up above the 200, and now the price action's heading a different direction. So Meta's still under the 200 of all the Mag 7. It's been there since the end of October under the 200. Tried to come back and see if we could get it back in the investable bucket, but didn't happen. Everything else, all our indices, and the rest of the Mag 7s are still, above the 200. Our lowest gainer is Amazon right now. That came above the 200 in May, and it's still above it, but at 9.24%. We'll look at those charts also. So speaking of charts, let's get to those. Come down here. Wow, Brad says 80 in Palm Springs. I'm jealous. Okay, again, we're just continuing on with the narrative. We're sideways. You could throw a box around this if you wanted to and just see we're range bound right around, the intermediate resistance level. That's where we're going to open up. You're watching the 9 come up. Same thing we said, right parallel with the intermediate resistance level. We're seeing the Bollinger Bands kind of close up. We're seeing a crossover on the stochastic. Looks like we're having a little bit of a rollover in MACD. So that gives me the indication that we're going to see maybe the 9 come down and price action get below that 9. We're right below it right now is where we're going to open up. Same thing kind of on the SPY. These same Mag 7s run the SPY and pretty much the Qs, same kind of thing. Got the 9 rolling up parallel, real close with where we're going to open, where we have resistance, flattening out Bollinger Bands. Looks like the same chart as the Dow. And then the Qs, same kind of thing right here. The 9's not quite up against resistance like we saw in the other 2 indices, but it's heading that way, and you're seeing the flattening out again, crossover in the stochastic again. So Again, it's waiting. We're waiting for today. Maybe today's the day it pops up one way or the other, based on what the FOMC says. But right now, it's been kind of boring, in the indices. Look at gold. Gold kind of looks like the same thing. Here we got the 9 rolling right up on resistance, right where we're going to open. This is look at these little small candles we've had, going back for a couple of weeks now. Into last week, we do have stochastic heading down, flattened out MACD, and you got some support levels underneath. You got the 20 and the 50 and the Bollinger Bands, which are really tight parallel, which is why we're heading sideways, and we're right again on that 9. Silver took a has really been kind of on fire. And silver popped up. We were right here on the resistance, and yesterday popped up above it. And we're right about where we're going to open up right on the upper Bollinger Band. So silver's up, above the $60 mark it was, and still rolling. So it's got some momentum. You've seen a little bit of an uptick in this stochastic, and we haven't been below the MACD since the end of November. So silver again has a nice run up in the SLV. So anyone who's in that, it's got to be pretty happy. Bitcoin hanging in there right above 90. Still in that box. Okay, we come up and we kind of wicked up a couple times. The interesting thing is, for the last 7-8 days, we've been kind of over the middle of that box right here, where we see support. And so we're still heading up and kind of in a right direction, but we need to get across the level of about 95,000 to get into that next layer, 95 to 100. But at least, we're staying steady and sideways. We still have Bollinger or MACD's heading up. We got a crossover on the stochastic. The thing that we don't have is really the momentum, but it's still in the upper 40s. But we need to get some momentum to pop that up on Bitcoin. Ethereum is a little different. So you can see Ethereum, has come up right to the 50. It's hit it twice, for resistance is right on the Bollinger Band. So we'll see what we can get going. But you see here, we've got more momentum. We're above the 50 level here. We've crossed over in this area and really got some momentum, got it up. We've got to get across that 50. We get across that 50. Next level is the 200. And we haven't been over the 200 since the middle of November. But you'll see that also in the ETFs. And then we'll look at Tom Lee's here a little better. But the ETF, FETH, which is the Fidelity Ethereum Fund, is now over the 200 in a pretty sizable way. And you're seeing the oscillators head up too. So that's one way that retail investors can get into the Ethereum if you wish. You're over the 200, over the 9. If you wish, you're over the 20 actually too. But it's for $32 or $33 instead of going out and trying to buy an Ethereum for 3,300. That's one way to play it. The IBIT for Bitcoin. This one's not quite back to the 200. It's rolling still up on the 9. We're above the 9. You got some good momentum, just like we see in Bitcoin. So again, that's another way you can play in the Bitcoin realm without actually buying Bitcoin physically. We have MicroStrategy. MicroStrategy is just right along this level of support, and that's where we're going to open. You got these still converging Bollinger Bands, but the MACD's heading up. You've got a roll up on the stochastic. The only thing we don't have is momentum. We're still at 40. You can see we don't have that momentum. If it could pop up, we did wick up to the 20 and back down, and then you have some sell orders right above it. But we'll see. It hasn't been sinking like it was, and it's steadied out. We've had the 9 come down around the support level and stay above it. And we'll see if we can get above that level on MicroStrategy. But you're starting to see a little bit, of a price action, 188 a couple days ago. We're closing at 181. So slowly but surely on MicroStrategy. But again, it's closely tied and leveraged to the price of Bitcoin. NVIDIA. Same thing. This is why we're seeing the Qs and the SPY sideways. Is NVIDIA is a big part of it, and it's just heading sideways, and we're going to open up right about where we closed. We're above the 9, we're above the 20s, but we're squeezed between the 20 and the 50, which we haven't been able to kind of get around. And then you've got intermediate resistance right above it. We're getting a little bit on the MACD, down here, and we have a little bit of momentum right at the 50 level, but that's just kind of medium, and stochastic's moving up. So you see the price action slowly up, but it's just not, cranking up like we saw over here. So we'll see if news comes out or what's going to happen with NVIDIA. We do have, a couple Oracle and Adobe earnings out today. Maybe that'll make it pop, or maybe go the other direction. Who knows? Meta. This is the one we've been trying to see if we can get above that 200. For 3 days, we've been fighting again. Got not only the 200, you got the 50, you got the upper Bollinger Band, as your linebackers. And it just couldn't quite get there, but we did come back down. So we're going to open up right above the 9. Here's your 20. So you have a little bit of support down below. And here's you see your momentum, went from 59, all the way to 53 in 2 days. So we want to try to keep that momentum up, but it's heading in the wrong direction. We're starting to see a little bit of flattening to the lowering of the MACD too. So again, sideways on Meta, but we'll still watch it, see if we can get above that, maybe get back to investable level, but still haven't got back to where we were. We had earnings and it dropped it back down. That the spending that they were talking about during the earnings report is just kind of dumped them down, and we're just having trouble getting back up and getting that enthusiasm back on Meta. Microsoft, same thing, at least, Microsoft stayed above the 200, got a little bit of a momentum rolling here. We're at 48 on the RSI, but good on the oscillators on the MACD and the stochastic. You see yesterday, we did have some reduction in volume. We're 14 million as opposed to 21. We had 21 about 3 days in a row and came down. So we had an up day on a down volume day in Microsoft. Apple, still kind of same boring sideways and up above a resistance and back down. You saw the 9 came up, skirted the resistance level, and now we've seen price action come down. Seen the volume come down a little. Negative crossover on the MACD. We've had one on the stochastic. Usually when you see this, not always, it'll mean the MACD is going to cross over a day or two later. And then we got the momentum, sliding down from where we were at 75, and now we're at 56. So again, Apple sideways, not much excitement. Amazon sideways. Okay, and again, this is why we're just seeing, the trading within the region, just sideways trading. We've been going through this for a while. You got the MACD below, you got a crossover in the negative on the stochastic, 46 on the RSI, just really kind of boring since earnings. Earnings for Amazon went the other direction and came back. Now I say watch out when it comes, everything comes back to the mean, and that's what we're kind of seeing Amazon and some of these others. Google, had good news and came out with their TPUs, and it just came up to resistance, and here we go. And then we said, watch this 9 come up, see if it skirts it and drags price action down. And it did go down right below the 9 now and below resistance, and where we have sell orders, a lot of resistance up there. And we're going to open up right where we close and kind of look at, the volume on Google too. It's been, since we've had the news on the TPUs and everything, where we had some pretty good volume. The volume's heading down. Negative crossover, MACD, negative crossover, stochastic. We still have a little bit of momentum, 64. We're carrying off some of this here. But again, Google sideways. And then Tesla came up to resistance. It's just boring. It came up to resistance. We did get above the 50. That's a good thing. We're above the 200, above the 50, but hitting resistance. Now we're bouncing between the 50, the 9, and what we have up here is, resistance, and then sell orders just a little bit above that, and negative stochastic here. That usually means we'll see that cross, not always, in a couple of days on the MACD, and we'll see what happens. But today is FOMC day, and we'll see what happens after that. Palantir, had good earnings and came back down, and we just came back up to right where resistance is. We don't quite have the 9 up to where resistance is to see if we're going to swing back down. But then I come back and look at the stochastic kind of coming back down too, and just, not much excitement in any of these. And we see that in kind of the S&P and the Qs also. When we go over to our watch list, we got out, the other day on our investment in Berkshire. We got in right back in here. We were waiting to see how it was going to come back down, and then you got out a sell order here at the 50 when it came down there and hit, and then it wicked down, came back up. Yesterday, we full candle basically under the 200. So it was a pretty wise move to use that 50, take our 0.33% profit on this investment and wait for it to come back. And it was kind of telling us back here. We saw this, we saw this crossover, and it's like, okay, that's not good, and it never did reverse. So you look at that and you say, I don't want to lose money. Let's get out. If it comes down and bounces, back up, we can always get back in. But in this case, we made money and we didn't lose money, and the oscillators helped us with that decision. So that was a good one. Get out of that one. CG didn't get into this one because it didn't hit. But what I like about CG is, the guy, we put it on the list here. Again, I didn't get in because it didn't hit my where I always try to get a bargain. It didn't hit, and then I let it go. And then I thought, well, it's not going to hit. It's going to have trouble getting past the 50, which it did until it got above it. And then it's using it as support, and it actually wicked all the way up to where we found sell orders yesterday. So right now, from the time we put it on the list to right now, we're up about 6%, from the time we put it on the list 2 weeks ago. BMNA, probably the best one we've had. Oops, I went BMNR. Sorry, BMNR. This is Tom Lee's. Probably the best we've had in a little bit as far as a runner. And what we like about this is it came down and hit this 200 and was able to maintain above it. 9 came down, it got above the 9. We popped in right in this area here. Had a nice day yesterday with Ethereum going up, even with a distribution on the other day. The oscillators still look good. Now we have looked like a crossover here, but we're at the 90 level, so we're pretty high. We might get embedded and see this thing go sideways, but we'll watch it. We don't have a crossover yet. We still see the oscillators moving up. So if we got into this one, if you got in, you're up about, where are we? 28.5% since we put it on. So nice run, still has some room up to the upside. And then we have sell orders right here where the 50 is. So we got to watch that level, and that's about 43.59. But considering we got in at 30 and change, that's be $13 up if it even hit that area. And you might want to take a little off, or if you're an investor and you want to use the Paul Tudor 200, you can still stay in that and use the 200 as your line in the sand. But that one turned out to be a good one. What else? Oh, ALGT. Oops, hold on. ALGT. Allegiant. Again, didn't hit it the other day, so I just left that buy-in. I went back and said, here's where it looks like it would hit. It did come down and hit and popped up a little bit, so we're up about just under 2%. You're still seeing okay on the oscillators. This is what I'm talking about on embedding. They're above the 80 for 3 days in a row, and that usually means you're going to still have some upward, not always, but usually means you're going to have some upward movement. So now we're sideways. We'll see if this 9 comes over and boosts us up a little higher. You do have some sell orders right above here, right underneath the Bollinger Band. And we have played the Bollinger Band a while, but now that you're up a little bit, you could put in a stop, and preserve a percent or two if you wanted to, or you can let it run and use the 2% rule, or come down and put in a stop at the 9 or a little below to see if it bounces off the 9. Once you're in, you should always be able to have a profit. SLB came up, hit the Bollinger Band again, and it's sitting flattening out a little bit. And I didn't like this crossover, so I used that as, okay, if it hits resistance, get out, and it did. So that would be about a 1.36% gain on that one since we put it on the list. And then TRGP, again, this one didn't hit. We had this line on here to try to hit it, and it didn't hit until it did, and then it popped back up. Now we're above the Bollinger. If it comes up here and hits maybe the sell order again, you can pop out of that one, put in a sell up there. We're up about 2.5%. You're up a little bit now on your cost basis, and you're above the 9, which is moving up. Got a little bit of a crossover here, but again, we're in the 80s. So, that could go sideways. If we were in the 70s or 60s and we're seeing a crossover, that might be a little different. But again, now that you're up, you have a level of stops right above here. You can put in and take, your couple percent if it pops back down, or you can try to let it run up, with a stop behind a trailing stop. But right now you're up. You should be able to maintain that. On the 200s, under the 200s, KDP, only 2 in now. KDP, we like these slow runners, especially in the consumer area. It did pop up here and it hit sell orders. You could have got out there if you wanted, but everything's kind of running okay, except for right here. We have a little turnover, but we're in the 90s. We'll see if that moves back up. But you're up, you can put in a stop, go back, hit a stop here, or a trailing stop, whatever you want, and you'll be up if it comes back and hits. But we did have a pretty good volume day on Dr. Pepper too. So up about 1.6%. And then DXCM would be the other one that's left on the list. This one's kind of a sideways mover, one of those slow sideways, but got above the 50 and just holds on the 50. And then when it popped down and hit that right at the 9, that's where we popped in. Again, here's an idea of embedded. We're in the 90s, for days, just going sideways on the stochastic. So we'll watch that. So we have the opportunity to still come up here. On the upside, you might want to get out here where the sell orders are. On the downside, we're up. So you put it above the 9 or somewhere in that and keep a percent or two. We're up about 3.5% on this one right now. A couple others we talked about, Oracle. Oracle comes out with earnings today. So be aware, we're above the 200. We'll see what happens with Oracle. And then we have Adobe comes out with earnings today. These don't reflect the earnings, but Adobe's had a nice run on the upside. But again, earnings, I like to be out before earnings on a trade. On an investment, it might be different. Here on your investment, you may use the 50, but it still is heading down. And you could use the 200, but we're not there yet on Adobe as an investment. GEV, going to double their dividends. So here's where you were. You were stuck right here on a resistance, and then you have an unknown market condition, which we call it, which is they come out and say we're going to double our dividends, and now you see you're going to open up here. Last I looked, at 691. You closed at 625. So sometimes you get those unknown market conditions that pop you up, and you're a hero, and now you make the decision. Do I take some off? That's a nice little gain. You don't have to take it all off, but do you take some off, take a little profit? Do you play with house money? Take your principal out and play with house money now. It's really up to you. What you want to do. We're above the 200. We're above the 50 now. Had a nice pop, but we've seen those pops go up and come back down. And remember, when they take a dividend out, I don't know what the dividend is. It's going to take it off your share price too. So just be careful chasing on those, and you might want to use it as an opportunity to have a little extra Christmas money. Applied was brought up yesterday. We didn't get to it. We talked about it, but you got to watch Applied. It's right here on the intermediate resistance level, and we've seen what that line can do to you. Unless you have something that'll pop you up. We've been on this level before. Kind of went up to where sell orders are. So if you're in Applied, you might want to take a note on a trade if you're trading. You see this roll over here a little bit, but we are in the 90s, and that could actually go sideways and be embedded. But again, you're coming up with some resistance there Applied. So just be cautious. CFLT, this is the one IBM is going to buy for $31 a share. You're going to, until this happens or doesn't happen, you're going to see probably this price just go right along here. At where are we? 29.90. So $1.10 below the price. So it's really, you can get a better deal for 30 days going to a treasury bill. You'll get higher percentage, if you bought in here, wait for the 31, which may or may not happen. You never know in some of these deals. And then I want one more thing, the XHB. We talked about Toll Brothers yesterday, in housing, and they're having to do a lot of incentives to move homes. And you see that, the home builders is kind of up and sideways, and now we've come back down. And you would think the home builders with interest rates going down a quarter point, maybe heading back up. But, we saw the crossover negative on the stochastic. We got negative momentum, and now we're seeing a crossover on the home builders on the MACD. So probably that quarter point's been baked in for a while, maybe back in this area. And now you're starting to see some of the home builders come out and say, hey, we're not, our margins are coming down because we have to give back more incentives to get people to buy these houses. And we're not really seeing the mortgage rates come down at this point yet. So anyway, so that's what I got. And I'm going to pass it over to you and see what you got going for us today.
Let's see here. Two things. And I'll hit upon the charts as well. Spoke to a friend of mine. She's a VP of housing sales for a builder down in Tampa last night. She summed up the housing market in her area as it's shit. was her exact words. And it's not going to get any better for a while. And I was like, well, is that a technical term? And she responded, yes, that's what we're all saying here at the office. She says it's dropped off. She's in the 600 to $1.2 million market, which is pretty average, I would say, right now for Florida, which is high for a lot of the rest of the country. But it brought up something else that I heard Ray Dalio talk about on CNBC yesterday. I caught a clip of it, and he referenced a what a bubble was, and he said a bubble is a unsustainable event. And this is a chart of housing going back to 1890. This is adjusted for inflation, and you look at where we are right now with housing prices. My daughter can't buy a house in my area. Um, it's too expensive. Yet rent is in a similar position. And so this younger group of people, so the 20s and 30s, are running into this wall of where my generation bought homes at that age range. They're getting into a place where they're so out of price, out of their ability to make a mortgage payment at these levels that they're stuck. And so when you look at historically what we've seen back in 26 or '06 and where we are today, and then you look at income levels as in relation to this, they're not going up together. So a housing pull down should be anticipated or just sort of a trickle down effect. And you think about it, mortgage rates have dropped in the last year, but that's not spurring on the purchasing of a home. So mortgage rates have to drop below, in my opinion, below 5% on a 30-year before you see one of the biggest purchases that generates the biggest impact on GDP it has to happen. So, the 10, which means the 10-year, if you back out 200 basis points off of 5%, the 10-year has to get to 3% yield. Well, today, the 10-year, let's just take a look here. Where is it? There we go. If I go to the 10-year treasury, where is it? There it is. 10-year treasury is at 4.198. So that means it's got to drop what 100 and roughly 119 basis points to get below 3% on the 10-year. That would you'll allow banks to have a 200 basis point built-in profit level, and you're now at 5%. So that's a big move downward. And until that happens, you're not going to see, I think, the growth in housing, which means the biggest purchase any of us will make in our life, most likely, other than divorce, will be a home. So, which makes you think, well, what's going to drive this economy higher? Some people will say AI is, but as we reviewed yesterday, of the new projects that are being proposed, only 10% of them are actually being built out. So that's a challenge there. I actually heard the other day that this $100 billion agreement between Open AI and NVIDIA is actually um, not a like what's the word I'm looking for? An agreement that actually could happen. And what if you remember right, Sam Altman went out and struck a deal with AMD a week later as well. And NVIDIA could easily go, well, forget that. We're just going to pull out of that. So that $100 billion that we thought or think is going to be spent or exchanged, I think is a better explanation, exchange between OpenAI and NVIDIA actually may never happen, which would then affect the projected revenue growth of NVIDIA. which also would affect the overall growth of OpenAI. And I actually think, Mark and I were talking about this earlier. OpenAI is the first person, company through the door. And typically the first company through the door gets whacked as they turn the corner. And I think OpenAI is one of those companies that's going to get whacked by a company like Google with Gemini. Supposedly that is outpacing on the adoption rate, outpacing OpenAI, Anthropic on a coding level, and some of these others. So I think what we're seeing is this sort of a reassessment of AI and where money is going to go and how money is going to be spent. Because remember, until the money is transferred one bank account to the other, it's it's just words. So take that in account as you're looking at the growth of some of these hardware companies and software companies as we go forward. When I look at the SPY, the S&P 500, we're sitting right at the bull bear fight line today, which is at 180 or 682. We got support level at 670 and a resistance level, first resistance level at 690, and then 700. This is take a look at where the RSI and what it's doing, look at what the MACD is doing. They're all starting to roll over, which tells me that this 682 level could easily turn bearish if we close below that, which means market makers will start selling into the direction of if SPY is selling off, it'll sell into it. And if it goes up, it'll sell or buy into it. So the volatility will expand, and we can see that in the VIX is starting to inch up as well. The Qs, the NASDAQ 100, same thing. We're at 622 at the bull bear fight line, resistance at 630, big support level at 600, secondary support level at 610. So depending on where we close out today, or in throughout the week, we could see a move lower. And that's sort of what I'm seeing with these indicators, these oscillators, the RSI rolling over, the MACD starting to show signs of weakening. IWM, this is the Russell 2000 small mid cap ETF, similar thing, rollover in the RSI. We're starting to see a rollover in the MACD as well. We're right in the neutral zone when it comes to the bull bear fight line. It's 249. We got resistance, big resistance at 260 and a secondary level resistance at 255 and support at 240 and then 237. So what's going to happen today? If he's projected he will lower rates by 25 basis points, it really comes down to the press conference and what they're indicating. As I said about the bond market, see if I can find it here. Just let's look at real quick percentage of stocks over the 20, the 50, and the 200. 200 is your foundation, it's the basement of your house. You're at 58.81 right now. We're basically right in this area where we found resistance in the past. Go back here to January, February, March. And so we're at the top of this resistance level. So 58% of stocks are above the 200, 43 of them percent are above the 50, and then 65 are above the 20. So watch that 20. That's your leading short-term indicator into your 50, into your 200. So we're at highs again. That's interesting. We see levels on the 20 where we've been at this level in the past. We're at highs again. So what's going to come down the road? We'll have to wait and see. The VIX volatility index, we've been moving up the last 3 days. Boom, boom, boom. We're up today 2.77%. So I'm watching that. So that spring that's been pushed down in volatility has been suppressed, is starting to inch up. And so what will cause that spring to explode higher? What event, what words will be said today or throughout the rest of the week? Or will there be anything that actually causes volatility to spike again? It's a wait and see game at this point. Where is there it is. Okay, so this is the 10-year, the US Treasury market, 2-year on the top left, 5-year, 10-year here, and then your 30. Earlier in the week, I talked about the 30 getting above 5%, between 5 and 6%. And that would be then the trigger for the Fed to announce quantitative easing, which is the purchasing of treasuries, pulling treasuries out of the market and pumping cash into the market, which creates liquidity. When you see the 30-year get in that 5 to 6% range, there is basically, think of it in this way: the expense of refinancing that debt for the United States is escalating, because remember, on average of US Treasuries, most of US Treasuries are financed below 2%. Well, where's the 2 year today? 3.61. That's 161 basis point higher than the average US Treasury. And as 2 year Treasuries mature, they've got to refinance them by issuing them, but they're going to have to issue them at higher rates. So they're in this panic mode in a way. They're trying to outrun the cost of treasuries, or the debt, which is over $1 trillion a year right now. It's astronomical, and we don't have the revenue to pay it. So they've got to figure out a way to get yields back down, which means they become the market. They absorb the treasury market. They suck it in, and then by doing that, they put liquidity back in the market, and the market then can sustain the move higher. But in my opinion, we're at this bubble level, which I know we've talked about this, but I thought it was a great definition of bubbles, and that is the unsustainability of something that has happened. So you look at credit card delinquencies. Mark pointed that out. Credit card delinquencies are rising. On 30 days, it was in the teens. Mississippi's in the 38% range. I mean, those are high. Look at 90-day delinquency rates, super high, all-time highs. You look at housing prices, all-time highs. You look at all these things, and you look at the unemployment levels that are coming in, rates that are coming in, or the number of job openings open, or the job openings are, no, it's the number of unemployment rate is starting to inch up higher. All these things represent a bubble. But as we've seen back at before every crash in the past, bubbles can keep going, and we can have really big moves. So like 1928, Merrill Lynch came out and said, get out of this market. It went on for another 9 months. We saw it during the great financial crisis. It can go on for a while. It's just what is going to, in the words of Ray Dalio, prick this bubble. What is going to cause it? So I would not be surprised if we get further into mid-year and we see a continuation of this bubble, and eventually something will pop it. Now, it's a wait and see game, but I think this is where you have to look at your portfolio, and you have to look at these returns you're getting. If you've had enormous returns like Kerry has and other people have, you have to start going, I can't lose this money. I've worked hard, I've made this money. How do I protect it? And that's where you start to take some off the table, take your capital off, what your initial capital off the table, put it to a safer place, and be prepared for things to possibly move down lower. So overall, this market is just in a zone, in my opinion, that it can go higher. It's just what is going to pop the balloon.
So what's
What's going to
interesting
trigger
to
that?
me, you show this charts of the bonds, the tens, the 20s, the 30s, and they're going up. Okay, the
Yeah, they're
yields are
inching
going
up.
up, and here everyone's talking about the Fed dropping rates. Well, the Fed drops the rate they lend overnight to banks, okay, which is a short-term overnight rate. The bond market is itself its own creature. It does not care what the Fed does. It really does not, and it'll show disapproval. Um, so we'll see what happens. But right now, global bond rates are up. You know,
Oh
Hey,
yeah, you look.
Trent,
yields.
Yes,
Go
sir.
ahead. Hey, Bob.
how you doing?
Good.
So this is part of my thinking of what's happening in the economy. You bring up Ray Dalio. I've seen his his summations of the economy and the bubble. And so, in my mind, for 2026, do you see workers' pay increasing by 25% or more?
No.
Right. Okay. So that eliminates the pay equaling inflation, right? So
Right.
inflation has gone up, but pay has not. In certain sectors, yes. Okay. If you're in the AI and all that, they're paying crazy money, but that'll come to an end. But let's just talk about the other 80%, right? Or more. So I don't see pay at all going up. In
Mhm.
industrial, you may get it in electricians, plumbers, and things like that because of the AI revolution that's going on. But overall, people that are going to work and businesses, people who own businesses, they're not increasing their pay, okay, or taking profits out of the companies. It's just not happening. So that
Mhm.
brings us to the economy, right? If if pay can expand, right, to make me able to buy another house or a house, then what do you have? You have high interest rates, right? If they lower those interest rates, in my mind, it's still substantially unaffordable. Because if you go back to where houses back in 2009 when they reset, a house that was a half a million or three quarters of a million reset to about $300,000. Okay,
Yeah.
that's what you would need to happen for people to afford homes if there's no increase in their salaries or income. So, and a lot of people are using the stock market to subsidize their incomes. Okay, so
Yeah.
and that's a problem now, right? Because we're going sideways, so people aren't really seeing, the gains that they've seen over the last year. So my own analysis is that something's got to happen. It has to be more than the Fed dropping the rate by 50 basis points or three quarters of a base. It's just not enough. That's only enough in my mind to just keep things the train on the tracks and keep going down the road.
Right.
There has to be a reset, and that reset is building. The pressure is building, but when does it come? And this whole AI build out that you're talking about is only 10% going to happen. Um, the markets are not really feeling markets. I'm talking about the construction markets, throughout the country, right, are not
Mhm.
feeling enough of it to be able to make a difference. What makes a difference in this country? People buying houses, because it affects
Yeah.
every single business in our country, right? They buy carpets, they buy furniture, you get work done, the construction
Washer
industry,
dryers. Yeah.
washers, dryers, you buy new cars because they pull their equity out and all these other things, right? So what has to happen? The housing market has to reset. That's the bottom line for people to be able to afford to buy homes. Because when you take those interest rates, everything's relative. When you take those interest rates on top of the house that cost 300,000 or 500,000 back in 2010, okay, is now 1.5, 1.3 million dollars. That has to reset. There's no way that people can afford it on their present income. That's not going to grow anymore.
Yeah. No, I 100% agree with you. I think I look at what I bought my house here for, what it's now selling for, and what it was, if we get, if we do get in Florida, um, the, what is it, the property tax, if you're
Zero.
Abatement.
homesteaded being zeroed
Yeah,
out,
yeah.
my house is going to be worth $1 million.
Yeah, but that's only if you're homesteaded. That's
Right.
what came
Well,
out
I
of this
am.
now. Yeah,
Yeah, that I am. So, my house value will go up. But who can afford $1 million home making at,
Yeah,
20 in their 20s and 30s?
Exactly.
that's the
I
Exactly.
key.
I look at this and I go, okay, how do you get affordability? Well, one way is to drive tenure to zero again, yield wise, and that'll bring, the 3% mortgage rate, 30-year mortgage rate will happen, but you're still doing that on $1 million home. So
Mhm.
then
Yeah.
you got to get the housing price down, like you said, to the $300,000 range. So what has to happen there? Well, you got to have a rug pull. You got to have something
It's got to
that
reset.
breaks it down again.
Got to
Yeah.
reset.
Yep.
Got to
So
reset. And that's
what's
what we
going to
have to
cause?
wait for. That's the bottom line. What makes that happen?
Well,
That's the
job.
question, right?
It's interesting
Yeah.
you brought up jobs, Bob, and you know I don't see that salaries are going to go up because we're seeing the unemployment go up and people losing jobs. So there's more availability of people than jobs anymore. So you as a business owner, you have a bigger selection of people. You don't have to pay as much because people need your job now, as opposed to I'm just going to go to my next door neighbor and work for him. You
Well,
know?
they actually show up. They
Yeah,
actually show up for the interview now.
yeah,
All
Do
of
yeah,
they?
them. Typically,
yeah.
you would schedule them, and one after the next would not show up. Now they're
Is
showing up because they
is
need a
that
job.
Yeah.
is that because also, for unemployment, they just have to have a job interview and they just show it and they don't show up, that kind of thing too?
They would lie anyway. That has nothing to do. And the unemployment in the state of New Jersey, they're on the employee side, not the employer's side.
Yeah.
They could trash you to death, and they're still right. No matter what they did wrong, they're still right.
I go back
I
to what you're talking about housing, Bob, and I just put it in the chat. I built my house that I'm presently in 1999. Okay, and it's on pretty good farmland. And I today, if I were to, and my interest rate was 7.75% when I bought it, which was manageable back then because the value of the building my house was so much lower than it is right now. If I were to try to come in and buy my house right now, at the value it's at these lower interest rates that we have, which is lower than 7.75, what is it, 6.25 right now? I couldn't afford this house.
yeah.
It's weird.
Exactly.
Yeah.
That's the point, right?
Yep. Yep.
So you got these young guys. They're coming into my neighborhoods because they got Netflix building not too far, a couple of miles away from where I live. They're putting up those 3 studios. If you Google it, you'll find out about it. But um, these houses, are going for 1.2, 1.5, 2.5 million, right? And they're buying them. I sit there, I'm saying, the house, 2 cars, 2 kids, and I'm just calculating the numbers. It's unaffordable. I mean, doesn't make sense to me.
Bob, this is something I think a lot about, especially walking through the grocery store. I look at our Ginger and I's particular situation. I do well, income wise. And I look at what I'm having to spend now as I get older to sustain our lifestyle. And it's ridiculous. It's ridiculous. And I own a home. I bought, you know, when it was cheap. I can't imagine, my daughter, 25 years old, my, other daughter, 22, and her husband, 23 years old. How the hell are they going to be able to
They
afford?
can't. They can't afford it. That's exactly what I'm saying to you.
And
And the other problem,
they are the income future, the
that's
revenue
right.
generating future, and
Exactly.
yet now we've pigeonholed them, we've put them in a corner and said everything you make is zero. You
And they're
can't.
blaming they're blaming the baby boomers is what they're doing because of what things cost today. And then you have the equity firms buying the homes, keeping the prices elevated, which is another issue. You
BlackRock,
know,
yeah.
yeah, exactly, which is another issue because they don't want those numbers to drop because the money that they have invested into the rental units for Avalon and all these other ones that they have their billions of dollars that all these young guys are paying 3,000 in New Jersey. There's not a rent below $3,000.
Yeah.
Okay, so it, and they get stuck in that. How could they ever save money unless they're getting bonus money or their parents are opening their wallet to help them to buy a house to get out of that circular situation?
Yeah. Well, it's like had a conversation with Haley yesterday, and she's not going to renew her lease. She wants to travel. She wants to do things. She's already got a travel schedule for work going on. And she's like, I'm nervous because what if I want to come back to this area? And right now my rent is X. If I come back, my rent is going to be Y.
Hi, Dad and
Am
Mom.
I making a mistake? And I'm
Hi,
like,
Luckily, her
Dad.
well,
parents
number
live there.
one,
Exactly. Hi, Dad and Mom.
Yeah, yeah. Luckily,
well,
her parents live there.
that's where I'm leading. That's where I'm leading with this. If you remember the move back into parents' home event during the after the great financial crisis, to me, it's like, okay, is that going to happen again? Are we going to see a spike and move back in with the parents, or move in with
It
roommates, even though
started
we're
already.
married and two kids?
It
You know,
started already, Trent. It started already.
You guys have seen that down in Florida with your housing. I mean, there's areas of Florida that are their defaults and everything that are going up in certain areas, right? On
yeah.
Oh
homes.
yeah, yeah. Like Tampa, Jacksonville has a high number also happening. Which is right next to me. I'm in St. Johns County. Jacksonville is right next door, and the numbers have spiked
So what's causing
substantially.
that, Bob? What's causing that?
They're building homes like crazy, and people are buying them, and they can't afford them. It's the usual, like buying the car, right? They get you to sign the paperwork, you buy the car, and you got the monthly payment, you just about afford it, and you really can't, right?
Yeah, when I lived in California, I moved to San Diego, and people would hire people to stand in line when they open up a new development, and you'd have to walk in and say, "I want these are the houses available. Which one you want? Yes or no." I mean, that was what they were
Right.
doing, and you
Yeah.
either got the house at the price they wanted, or you didn't get a house.
It's
Yeah.
just the car dealers are dying. Um, they're in really, really bad shape. I was in the BMW dealer because I got a car coming up, that my wife's car that I'm flipping out. And I got an X7 on lease for $1,500 a month. That is cheap. That's a 1900 with a V8. 1900 $2,000 monthly typical payment. I dragged him through the dirt, and he gave into anything I wanted on the car. So, the market is in really horrible shape, and dealers are dying right now. Cars are in trouble. Housing is in trouble. The question is, what pops that bubble for the housing
Well,
market to reset? That's the real.
Bob,
And they're saying that the consumer is resilient. They have, Karen, all
Yeah,
this money on their credit cards, and they're saying they're resilient. I I don't know. I mean, there's a lot of different ways to make money today. You can Uber, you can do door dashing, you can do Rover. You
but
know, I get
here's
that, but I don't know. It's very
here's the thing.
confusing.
Here's the thing. Here's the thing about this, Bob. I saw something on X today where they're talking about entry level white collar jobs being replaced by AI. Now, whatever anybody says on these news channels, I take for 50%, right? But what happens when I'm able to replace that entry level white collar job initially, and I replace it with AI and I consolidate my business from, say, 400 employees to 200? Where do those people go? And then the affordability to sustain that white collar lifestyle all of a sudden starts to falter. It's where we are headed technology wise is it can be good, but also it can be very bad for the economy. And I don't think that's being taken into account And I think this is where we start to ride that fence of where things start to crumble. And you then, when things crumble, that's when you get reset. So the more we see unemployment rates go up and we see white collar jobs going away because they're big money breadwinners, they spend a lot of money in the economy. Once we see those things start to happen and accelerate, then I think you get the drawdown in the market. My house, realistically, for what it is, should be $250,000. That's what it should be because of who made it. And the premium I'm getting is I'm a 5 minute walk to the beach. That's why I get the $500,000 premium on it right now. But at some point on a United States scale, we have to bring that housing price back down to 200,000 to 300,000, and we have to make it affordable. But what causes it? I don't
Well,
know.
part of what causes it eventually is liquidity, right? Is one issue, but they're going to cure that problem with QE now, right? They're
Yeah,
going to start pumping money. They started already, right? Didn't they, Mark? They started buying bonds and
uh-uh.
everything? No, not
They
yet.
stopped QT.
But
But they're,
QE, they're
but I see that,
supposed to
yeah, the
start.
Fed's going to start it calling it something else, and it might get announced today, 45 billion a month. And they're not
Wow.
going to call it QE. They're going to call it something else.
Okay.
We'll see if
So,
it happens. That's the rumor.
but all that is to me is a stall to what's going to happen. They still have the problem of housing that it's overinflated and it has to substantially drop for the economy for people to be able to afford to buy, right? And they can't buy at these levels. There's a very small percentage of people that can buy at the levels homes are now. And, a couple 100,000 is not the number. I mean, it has to like 50% you need for housing to be cut.
And I think, look,
Yeah.
I think it all keys on the job market. If you lose your job or you're scared of losing your job, you're going to downsize or get rid of your house. You're going to
And
have to.
again, Mark, I asked the question, do you see people's salaries going up by 25% next year?
Absolutely, absolutely not. I see them going down.
Right. Okay. There you go. Right. Which is going to put additional pressure on the consumer.
Exactly.
So here's my question is, how aggressive will the Fed get with QE? Like to get what we're talking about to happen, affordability to happen, the Fed would have to get so aggressive on quantitative easing,
Yeah, it's not going to
which
happen with
creates
Powell.
which creates another bubble.
Which is not going to
Well,
happen with Powell. He's got to go, right? And that's coming.
right, but with a new Fed, we all assume, are
Yeah.
expecting a new Fed
Yeah.
probably in May and June.
Yeah.
How aggressive are they going to get? You
So
know,
I agree with you. One question I have in my mind is Powell lame duck after
He
this
is.
meeting.
I believe he is.
Yeah. That's what I
which
think
would
too.
get, which could get him, not him, but it could get a correction of more than a correction, maybe a 20 or 30% drawdown off highs in the market, which would happen quick. And so let's say that happens March, say, February through May, you get a new Fed and they come in like guns blazing, QE, and put a floor in the market again, and all of a sudden you got cheap money and you get
So
a
who does that benefit? Who does
full.
that benefit? That benefits asset holders because if you're gonna if you're gonna start using QE and pumping money and you're gonna lower the interest rates, you're gonna see asset prices go up, which is inflation again. Which is, I think, is what they're trying to do. Is that they can't get their way out of the $36 trillion of debt. They can't pay it off. They want to inflate it away in some way, and I think that's what they're going to do. But those who own assets, who you own a house, you own property, you own whatever that's a hard asset, those prices are going to continue to go up with inflation. Then,
Yeah.
I don't see that that's going to help us at all. What do you think, Bob?
No, I just don't see it. There has to be a reset. I mean, businesses are struggling across the board. Um, it's hard to do business. I can tell you Everybody's tightened their belts. We've gotten really strict on terms. I've closed commercial accounts because of them being so far out on paying us. I'd rather not provide product to somebody that's going to pay me 120 days. I'm not interested.
That's
So
because they're trying to make you the bank at 0%.
because the bank's not giving them any money, that's why.
Right. And that's the other thing. So we have cheap money out there. And you said it a lot, Bob.
Yeah,
You can go try to get a loan, but they're not going to give it to you,
yeah,
even if
that's
the
right.
money's cheap.
Yeah, because you're too high of a risk, you know. And they base that on your deposits and your money in your account. You know, they know what they know everything about a business today. I mean, there's nothing to be they have all the tools to know if you're going to be around. Let's put it that way, right?
I think the question that I think is probably bouncing around everybody's mind is, well, so where do I go? Where do I go with if I'm, up so much and we get another, say, 3 to 6 months out of this market going higher, where do I go then?
But
And
it's
I think
not.
that's where, what's that?
But it's not going higher. It's going
Well,
sideways. Where
let's
where
say, let's,
there are certain
let's,
stocks that are going up. But
yeah,
other than that, majority of it, even what Mark showed today, everything's sideways. It's been going that
yeah,
way, and there's been some contract. Take Berkshire. Look at Berkshire because they're moving, people around or people leaving, whatever the story may be. It took a haircut, right? So, you know, I think that a lot of companies are resetting, repositioning themselves, making decisions. Um, in reference to the AI is still questionable where they're going to get the money, revenue coming in. That's a big question because, $20, $50, $100, it doesn't pay for all this money they're spending. So the monetization of it is a big question. And when does that happen? In 2028, and they're going to spend all this money? There are just too many questions in the air and too many balls that are flying around, and something's got to hit the ground, right? When's the shoe going to drop?
And
yeah.
I think
I
I think
think,
that's a good place to be for me personally is cautiously on the side with some cash because I'm looking. Paul brought it up yesterday, with people who are selling. All these big wigs at all these big Mag 7 companies are selling their shares in stock. I just saw a director in Nvidia sold $65 million this month.
Yeah, why did he do that?
Exactly.
Because it's not going to be so good over the next few years. So
Yeah.
he's selling his positions.
It's the
You know,
same
they
pattern we see all the time, Bob. These guys sell out,
yeah,
then the market drops, and they buy things, pennies on the
yeah,
dollar.
exactly. And that's what everybody should be thinking right now you should have not more than 50% into the market, and that I would say is high.
I think yeah, I think you-
You
I
should
think you
be
have to
more
have
liquid.
I think you have to have a plan to get out. Whether it's the 200 or the 50 or whatever your plan is, so that you don't lose 6 years of your life, trying to get back to where you were.
What you
yeah,
built. Yeah,
Exactly.
exactly.
Yep.
All right, guys,
yeah.
I gotta leave.
All right, Bob. Thanks for
Thank-
coming back on
Talk to you
and
soon.
giving us some good advice in here.
All right, take care.
All right.
Have a
Not
great day.
advice, no, not a recommendation, just an idea.
That wasn't financial advice. That was just advice from
No.
Uncle Bob. That's Uncle Bob's advice.
Oh.
For entertainment purposes only. Other
That's
than
right.
he's going to give us, other than if you go up to Jersey, there's a good chance that you can get a 25% pay raise.
Not by me. You'll take a pay cut. See
All
ya.
right.
All right.
We
We'll
gotta
wrap,
go.
we'll wrap it up there.
Yeah, good conversation, everybody. Nice in the chat too. So good day. Good day.
Yeah.
It'll be interesting. Let's watch FOMC and especially get some popcorn and red wine for Trent and maybe watch
Hell no.
the presser. No, tequila maybe.
Yeah.
You
All
got to
right.
Probably,
tight.
probably should stay away from that for a bit.
All right.
Oh, no.
All right.
Hi, guys.
Y'all have a
Greetings to
great
you
day.
all, Trent and Mark. Greetings to you all.
Merry Christmas to you.
Live
I think
loud.
that's what he
All right,
said.
guys. See
Live
you later.
loud. We'll
Thank you,
talk to you
guys.
all later.
Later,
See you
Mark.
tomorrow. See you.